Welcome to everyone on the webcast. According to the Census Bureau, there are roughly 6 million small businesses currently operating in the U.S. These businesses support the growth and vitality of our local neighborhoods, spark innovation, and provide a proven pathway for many people, particularly women and minorities, to achieve financial success and independence. In recent years, almost one half of the U.S. workforce has worked in small businesses, and small businesses collectively produced 45% of U.S. GDP. It can come as no surprise to any of you that the small business sector has borne the brunt of the economic damage caused by the COVID pandemic. Recent studies show that about 1 in 5 businesses that were open in January have stopped transacting entirely. Most of them have probably closed their doors for the last time. In a recent large survey of small business owners, 42% of correspondents said they were at risk of going out of business in the fourth quarter of this year. In contrast, as a result of debt market support and other interventions by the Treasury and the Federal Reserve, big businesses are doing a lot better. One has only to look at the stock market indices as proof. The fortunes of small and large businesses are diverging partly because of differences in the financial resources available to them. Bank loans, still the biggest source of funding for small businesses, have been hard to come by since the COVID crisis struck. In a July survey, 70% of banks reported that they had tightened lending standards for small firms, the most since the fourth quarter of 2008 at the height of the financial crisis. And most of the online lenders that the smallest enterprises increasingly turned to over the last decade for funding, and who extended more than $20 billion in credit in 2019 alone, withdrew from the market entirely in March due to lack of institutional funding support. The survivors are just now beginning to return to the market. Government interventions have been helpful, but they were based on the premise that the crisis would be short-lived. The goal of things like the Paycheck Protection Program was to freeze the status quo until a V-shaped recovery came to the rescue. But the virus had its own plans, and we are still seeing high numbers of infections and deaths. Many observers are predicting that disruptions for small business around the country may last another year at least. The $669 billion that small businesses received in the spring through the PPP program has by now been spent. And the Federal Reserve's Main Street lending program aimed at small and medium-sized businesses has so far had little uptake among lenders that the central bank was relying on to underwrite the loans. And many of the Small Business Administration's other emergency lending programs are still underfunded. Further aid for struggling small businesses from Congress has caught up in our polarized politics and may not arrive until January, if at all. So many small businesses are going to be struggling for the foreseeable future. But not everything is bad in the small business sector, where resiliency has always been a critical success factor. New business formations are up significantly over last year's numbers, although that seems hard to believe. And my own personal experience is full of small business people who are finding new ways to do business and save their own and their employees' jobs. It's with this dual perspective that we'll turn to our panel for their views about what the future holds. Let me start with Luz Urrutia. Luz, because Accion Opportunity Fund operates a national lending platform, you have visibility into the small business picture in many markets, particularly along the West Coast and nationally for minority businesses. What's your take on the current situation for small businesses? Do you see any change in the situation for where it was over the summer?
Thank you, Todd, and the rest of the team for putting together this great panel. Yes, small businesses are suffering. There is no doubt about it. In September, you mentioned some of this, Todd, the National Restaurant Association said that 100,000 restaurants, 1 in 6, have closed in the past 6 months, and that 40% of restaurant operators believe it's unlikely that their businesses will be afloat 6 months from now without additional relief packages from the government. Another study that was published by the National Bureau of Economic Research found that 2.2 million small businesses have shut their doors since the beginning of the pandemic. And Oxford Information Technology in Saratoga, New York, which tracks more than 26 million US businesses with less than 10 million in annual revenue, expect that as many as 4 million small businesses could be lost in 2020. These numbers are coming from all over the place. There was a survey that was provided by the US Census Bureau with more than 800,000 small businesses, and they found that only 20% of those businesses think it will take less than 6 months to recover, which is down from 56%, which thought in April it was going to take less than 6 months to recover. the challenging part is that businesses owned by people of color, women, immigrants have all been hit the hardest by this pandemic. The same National Bureau of Economic Research found patterns across gender, race, and immigrant status that reveal the disproportionate impacts that COVID-19 has had, and it's lingered into May and June. If you look at African American businesses, they continue to experience the largest losses. They've eliminated 26% of their active businesses in May and 19% in June. Latinx businesses, 19% businesses decrease in May, 10% inactive in June. Immigrant-owned businesses, they've suffered a large drop in business activity, 25% in May, 18% in June. So when you look at small businesses, some of them have closed because they're in industries such as accommodations, food, service, educational services that are most affected by changes in customer behavior, and especially the physical distancing and mandated operational restrictions that began during the pandemic. Other small businesses may close because, as we all know, they were already at risk financially, even before the pandemic started, holding less than a couple of weeks of cash reserves. That's why, we were all very excited about the PPP program, but unfortunately the results were less than what we were expecting, particularly for those small businesses. A poll that was released by the advocacy organization Color of Change and Unidos found just 12% of Black and Latino-owned businesses who applied for federal aid received what they had asked for. 41% say they were denied altogether. So, prior to COVID, small businesses, primarily, again, minority, immigrant, women-owned businesses and low to moderate income, were already facing significant challenges when trying to access responsible and affordable capital and other resources that they needed to grow their businesses.
Do you think this is a problem that finance can solve? Is this about lending? In other words, is there a market today for small business lending for struggling companies, or is this a deeper problem that requires a solution that goes beyond additional financing in the form of debt?
I think it's a combination. All businesses are not created equal. Not all businesses are suffering the same challenges, and not all businesses are having to start from the same place. I think that some businesses are, very well ready to take on new debt that's affordable and that's responsible. I think, one of the biggest challenges right now is that because of PPP, and we call PPP a loan, PPP wasn't a loan, PPP was a grant, right? But it covered 2.5 months of salary plus some expenses of the payroll of the business with some expenses. And so a lot of businesses, that didn't have employees didn't really find a need for PPP, not to mention the fact that because many of these businesses do not have established banking relationships with banks, or frankly, because of the color of their skin, they don't get access to the loans that are provided by banks. And so they stood at the back of the line, and some of them didn't even make it to the line at all. And so for those that did receive PPP, they're looking at accessing this kind of very low cost, almost free in some cases, capital. And so I think there is a wait and see by many businesses to determine what is going to happen, how long is this pandemic going to go, how deep is it going to get. But I do see, some businesses, there's some industries, for example, the transportation industries, long haul trucks, mobile food trucks. Those are businesses that frankly right now are doing pretty well. The challenge I think that we have in terms of providers is that, when you look at the landscape prior to COVID, $87 billion of gap in small dollar loans under $100,000. We know that mainstream financial institutions do not lend to these small businesses for a variety of reasons. And so the entities that came to take the place of banks, are the fintechs. Some are wonderful, very responsible, and some unfortunately are very damaging, providing loans that are not responsible, that are very high cost. And so our belief is that after COVID, banks are going to get further away. You mentioned it. Some of the fintechs that are responsible and others that are not going to survive and slowly are starting to come back. So that gap is going to get bigger. And what that's going to mean is that small businesses are going to be faced with even a bigger challenge to access responsible and affordable capital. And the saddest part of this is that it comes at a time when many small businesses in the US will need to make extreme changes to survive. The broad themes are, protecting the health and safety of their employees and customers, adapting business models, investing in technology and talent, adjusting staffing models and labor practices. But, small businesses are going to need to make all these changes at a greater relative cost with less working capital. And small businesses with already slim margins really have little room to invest in the business models and the technologies that they will need to survive. So it's going to take collaboration across many members of this ecosystem to keep them afloat.
Well, to ask a slightly different type of question, what's your sense of the mental and emotional toll this is taking on people, and how are they managing to cope with it? Because we're talking about millions of people who are stuck in this situation.
You mentioned the word resilient. I think that's their middle name. Small business owners' middle name is resilient and resourceful. We recently, and granted it's a small sample, but we recently did a survey for a group of our borrowers, to ask how they've adapted their businesses in response to the pandemic and what their outlook is for the future. And the good news is that they're really looking forward to what the future brings. We found the vast majority are very concerned. In fact, 4 in 5 said the pandemic has negatively impacted their businesses, with most reporting reduced or zero revenue. But by the same token, they are hopeful about the future. 2/3 said that they've already implemented changes to their business in response to the pandemic. So whether it's pivoting their business, opening a new business, making changes and adjustments to get through this crisis, 2/3 of them are reporting doing that. And 8 in 10 expect their financial situation to improve, which personally, I found that amazing, considering what I see small businesses in our neighborhoods going through. And most of them are expecting to keep their businesses open long term. The smaller businesses are saying that this isn't going to kill me. I'm resilient and I'm flexible. And what I've done, I've gone through trouble before, and I'm going to get up and I'm going to do it again. And so while the situation is tough, no one should count small businesses out, because I think we are going to see, again, depending on how long this lasts, I think we're going to see many coming back. If it's not with the same business, is with a pivot or other things that they were looking to do. But golly, we need help from Congress to make sure that we've got pieces to pick up and neighborhoods to rebuild.
So picking up on your comment about the large gap, pre-existing gap in financing for the smallest businesses, which has only been made worse by the inability of online lenders and the unwillingness of banks to deal with this customer group. You're a so-called CDFI, a community development financial institution, a nonprofit focused on providing essentially below market rate financing to aspiring entrepreneurs. What's the role for the CDFI sector, and does something fundamental have to change in the way we think about small business formation? Obviously, the legacy of systemic racism, if you're an African American, is you don't have, the house to mortgage in order to buy the equipment for your new restaurant. What's your view on what could fill that missing gap?
Yeah. So, for everybody's benefit, community development financial institutions that Todd mentioned basically are generally nonprofits, but there are some that are for profits. And what their focus is really lending and providing financial services, technical assistance, business advising to low-income communities and communities of color. And like minority depository institutions, who are banks owned by minorities, they're the ones that are poised to help small businesses as the credit markets shrink. And they need support to come out of this crisis to, help them restart, rebuild, and regenerate. Some of the challenges, right, that the CDFIs and many minority depository institutions have is that they need to be well capitalized as well. In many respects, they're like small businesses. And so in order to meet this ever-growing demand of capital and help that small businesses are going to need to get back on their feet, they need to have the resources to provide that capital. This is why now more than ever, we see banks. Well, this is a huge problem that needs to be solved, right? The problem before COVID was big in terms of access to capital. Now it's significantly bigger. And so in order to solve it is not one single institution or one single segment or of the industry. It is a combination of banks and investors, foundations, government, all pulling together and partnering and increasing their lending and the resources to CDFIs and minority depository institutions, so that these organizations that are already in these communities serving small businesses can continue to lend and can continue to provide for the revival of Main Street.
Well, thanks, Liz, for those comments. We'll come back to you in a bit. Let me turn now to Kaaryn. Kaaryn, your work at the Columbia-Harlem Small Business Development Center is very focused on New York City, and particularly on the minority business community in the areas around Columbia, northern Manhattan, and the southern Bronx. New York City was hit early and hard by COVID, but seems to be doing much better now. How has the improvement in infection rates affected the survival chances of the small businesses as you advise, particularly the minority-owned ones? And perhaps you could start by telling us a little bit about the Development Center and the work that it does.
Sure. So the Columbia-Harlem Small Business Development Center is actually a public-private partnership between the federal government, specifically the Small Business Administration, and Columbia University. So we receive funding from the SBA, and we send reports to the SBA, and many of our goals are actually state assessed by the SBA. We provide two primary services. One is business education, small business and entrepreneurship education, and the second is one-to-one counseling and mentorship. We are very fortunate to be part of Columbia Business School, and so we generally use the core curriculum for the MBA program to develop our primary workshops and our primary training. But our business advisors are experienced business advisors, and they've been working in the field of business development for over 20 years, each of them. So as for your question about the improvement in infection rates, I think the biggest issue for us was pause, quite frankly. When everything stopped, we started really looking at the status of our businesses and grouping them, putting them in two groups. One was the Main Street businesses, and the other was or is those businesses like Amore, who you'll hear from later, which are business to business. And we saw issues for both. Obviously, when pause happened in New York, everything was shut down except for our restaurants, except for our essential businesses. Our restaurants were fairly hampered by this idea that they could only do takeout and delivery. But as Lou said, they pivoted very, very quickly, and we provided them with a pandemic resiliency plan and a pivot plan and pivot training so that they could think through the ideas behind pivoting, strategize a pivot, and even fund a pivot, which fortunately Columbia University created an emergency loan fund specifically connected to the idea that many of these businesses would have to pivot and needed some capital to do so. And so that fund actually began, or I guess we started lending from that fund in July for businesses that were still, in many cases, closed, but with the expectation that they would need some money in order to pivot and reopen. Since then, we've seen our client businesses actually come back. I think the infection rates, I wouldn't even say that the infection rates were so much of an issue as pause.
Right.
Closing the businesses down and then reopening them was really very important for our community. When we look at kind of geographically within New York City, Um, the Bronx residents were really badly hit by this pandemic. In many cases, it it was mainly challenging because they were the ones who, in many cases, were the most infected and affected, both the Bronx as well as Queens. Upper Manhattan residents, many of them stayed in their homes. They were not the residents who had a second home, who left New York City. They stayed in their homes, and they have been able to commit to their community and to their community businesses. So many of the businesses in Upper Manhattan are actually on track to stabilize within the next few weeks and months. And we've been very fortunate as the SBA resource partner to be designated to help them get all of the SBA loans, as well as New York City loans and grants, and then of course Columbia's loan fund. Other areas have not been so successful. Midtown, we're seeing a lot of Main Street closures because those businesses are primarily supported by office dwellers, quite frankly, who are coming into Midtown to go to work, whether they're coming from New Jersey or Long Island or even other parts of Manhattan. They're not going to the office, and so we anticipate quite a few closures there. Upper East Side seems to be fairly stable also. Something that we're starting to see, which we're very happy about, is that businesses are opening. Not only the existing businesses, but we're starting to see some new storefronts in residential areas, plans that people already had in place, and they're pivoting. They're opening their second location or their third location if they're small businesses. In our pandemic resiliency plan, we really focused a lot on two primary issues, which were based on finance. And that was the people and the rents. In New York, those are the two largest expenses that any small business has, any Main Street businesses has. And we were fortunate to work with the law school and with a variety of different lawyers and legal services agencies to teach, and consultants and professors, to teach our clients how to negotiate lower rents with their landlords. And of course, they were also able to take advantage of the payroll protection plan. So that lowered their expenses, at least temporarily, so that they were able to hold on.
So I was going to ask you about that real estate question. I mean, there's an oddity here, which is the deferrals and other things are pushing the problem onto landlords, some of whom are large corporations and able to deal with that, but some of them whom are not and are small businesses in a sense. What's your sense of what things are going to look like in the winter and the early spring, when the distress on the landlord side and the potentially eviction issues on the small business side kind of come to a head?
Right now there's still an eviction moratorium until December 31st. My expectation is that will be extended at least until there's a vaccine that's readily available, quite frankly. And so hopefully that will be extended at least until the spring. I think everyone's big concern right now is the restaurants. The restaurants in New York are kind of the lifeblood of New York, in addition to our tourism industry. Tourism is just on hold, and it will come back, but that will mean a concerted effort, in a year where everyone is focused on bringing tourism back. But right now we are looking at the restaurants and how we can support those restaurants so that they can survive. I think you're going to see a lot more takeout, a lot more delivery. I was just on a call with the city earlier today, and they're really trying to figure out how they can support the outdoor dining in a variety of different ways. So yeah, I mean, that's what we're really concerned about. I'm also very concerned about those B2Bs like Amore, who you'll hear from in a moment, which are very small, small companies, small firms that may have lost certain contracts as larger companies have shrunk. And so that's kind of a secondary group that that we are concerned about as well.
So there's an odd policy issue that we're seeing out here in California, which is, as you may know, the legislature cracked down on the gig economy companies. And there's a proposition up for vote in next week as to whether that attempt to bring them within the employment context and provide employee benefits and other things and protections to people will remain. But much of what's happening in the restaurant industry, at least, is wholly dependent on gig economy, on DoorDash and companies like that. Maybe I'd ask you and ask Liz if she has a view on that as to whether we think we're going to run into a fundamental policy conflict over the fact that the world looks like it's getting more dependent rather than less dependent on the gig economy.
I think 6 or 9 months ago, my answer would be different. As companies are shrinking their employee roles, I don't know whether or not they're bringing in those temps and those gig laborers. I have not heard of that really happening. It seems like everything really is shrinking, except for food delivery.
Right.
Food delivery in New York is like it is a cultural thing. Quite frankly, there's a certain level of it that actually affects public health. You don't want a bunch of people running through the streets trying to pick up their food if you can have one person delivering it, to 15 people in 2 hours. So, and I think New Yorkers are willing to pay. We've been paying for it. We're willing to pay more for it. We're already, paying some additional surcharges for it. And there's also a huge commitment on the part of New Yorkers to support that. Now, as I've spoken to people in other cities and other states, I'm not hearing the same commitment. And so that to me will be very interesting.
Liz, before we move on, do you have any thoughts on that one?
Yeah, I think we've set this, as you know, Todd, we have a big practice of lending to long haul truckers and folks that deliver, for multiple businesses. And what we're hearing from them is they don't want to become employees, because becoming employees means they're going to lose a lot of the flexibility. And in many cases, they're going to end up making less money, believe it or not, of what they can make on their own when they go find and seek their own contracts. So, the concern I think that we all have is in fact, this is voted for and it passes, then, there might be a reduction, right, in drivers, whether they're Lyft, Uber, DoorDash, long haul truckers, because now they're finding that it's no longer, as feasible for them financially as it was before. So it's all going to be, left to wait and see what happens.
Okay. Let's now shift to Amore. Welcome. Unlike the rest of us, you're living the COVID small business challenge at your company, which is called Apples and Oranges Public Relations. Tell us a little bit about the company and what the last 6 months have been like for you and your employees, and kind of focus on what your biggest challenges are and, how were you or did you find the help that you needed to make it through?
Apples and Oranges Public Relations is a 10-year-old agency that I started myself 10 years ago after being downsized from working in the architectural and design industry. And so when that sort of happened, I took that as an opportunity to just explore and to start my own business, while being unemployed. Over the past 10 years, we have helped our clients to build their reputations, build their profiles, and everything like that in terms of helping them in terms of growing by using PR strategy to help them do so. The last 3 years for us has been sort of a little bit up and down. 2019, I would say, was a good year. I think that was my best year out of the 10 years. And then 2020 hits, and then there's COVID. And this was a year where I had a lot of plans, and so that changed. But one thing I would like to say is that had I not been a part of a program like this, under the leadership of Willie Mae Vesey and Kaaryn in the Columbia Small Business Program, I don't know if I would be here today. And so for me, since the pandemic has happened, it's really made me look at business a whole different way. Before that happened, I started to look at my business differently because I was in the program and I was learning a lot that I didn't know. Some things I knew, I just wasn't practicing. But when COVID hit, there was a lot of different things that we had to do. There's a lot of changes we had to make. Just like a lot of the small businesses that had to pivot, we also had to do the same thing. And so I went from a team of about 12 people down to a core team of 5. And right now we are strictly virtual. However, if we do have meetings or we have to do a photo shoot or something for a project, we put our mask on and we go. But it's really changed the way I've done business. I think I will say for the better. I'm looking at things a lot differently. I look at my finances differently. I look at operations differently. I look at my employees differently. And I am being, different. I'm allowing my employees, or what I like to call my team, to actually contribute to the company instead of just being the CEO of the company. So for me, COVID has been, I've lost business because of it, but I would say that it's kind of made me stronger in terms of operation because of it.
So you mentioned that you've changed some of the ways that you do businesses. Do you think those changes will be permanent, or you'll go back to something more similar to what you were doing before, assuming that we have a resolution to the virus problem?
No, they will be permanent for sure. I've learned a lot, so they will be permanent for sure. So it was just a lot of ways that I did operations. That's going to be really permanent. I'm just like not doing things that I don't need to do. Only doing things that are necessary for the business to grow, and not engaging of things I maybe want or I want to try. But this is definitely going to be permanent, and I can't tell you enough how this has really changed me as a business owner, as a CEO, as the owner of a company, in many, many ways than one. And I will say it's been for the better. So this is definitely permanent. How I look at my finances is really permanent. I went from maybe checking it once a month to now doing it every day. So in the morning when I wake up, I'm checking my transactions. I'm looking at what's going out. With my team, I'm managing the time. We're only doing things that matter and only things that are going to move the needle forward. And so there is no, wasting of time. So we don't do anything it's just like survival. So it's like we're only doing things that we need to do, and that's it. Everything else is secondary.
It's basically you had a business school education in the course of several months here in terms of how you think about prioritizing. That sounds great. Let me ask you some questions. Did you have a lease, and did you have an office before this, and what happened with that?
I did. I had an office on Park Ave South and 28th for 4 years.
Great neighborhood, by the way.
Sorry?
Great neighborhood, by the way.
Oh, yeah, it's convenient for my house. And it's a Regis space. So what happened is, the reason why I chosen that space is because I was able to kind of grow. The space allowed you to grow. So you would have, a desk or two if you needed it. You can have a full office. You can scale up or scale down. So I like that about it. However, due to the pandemic, they closed that location because a lot of the people that were there, like some of the companies such as mine, a lot of them started to work from home. and a lot of them really, really downsized dramatically. And so that location is no longer there. However, within that same location, I do know some people there, so I will probably be on another floor starting maybe January. But I haven't worked out of the office in maybe 6 months since COVID started, but we do plan to go back in January. However, what we're doing differently is instead of having everybody in the office, a couple of days there will be maybe 3 of us in the office, and some days it will be the other 2, and then just for meetings. So we're kind of going to do like half virtual and half in the office. And also for me, that helps to cut down on the cost of rent. So like I said, I'm only doing things that I need.
And you weren't, it's interesting. So you were in a good position because you weren't burdened with a long-term lease. You were working with Regis, who was providing you with flexible office space. That's pretty lucky. Did you take advantage of any of the SBA programs, PPP, or the emergency lending, or any of that?
I did, yes. Yeah, with the guidance of the small business program, I did apply for the PPP. I applied for the EIDL. I applied for pretty much everything that was available to me. Some I did. I only got the PPP and the EIDL loans. The grant, the grant, and
getting you through this.
Yes,
great.
And so that has helped a lot.
Let's shift to some questions for particular people in the panel. I wanted to follow up with something Kaaryn said and ask her. You said that you, and actually Amore said it as well, that you were helping people pivot and learn how to change how they were doing business. Does that involve, changing the focus for some businesses towards online, or what types of changes are you really proposing, and how have they worked for people?
That's
me. Yeah, there you go.
Oh.
Sorry. I think often business owners already have ideas of what they would do. And they come to us and they say, oh, well, they may have 15 different ideas. And so what we really are doing is trying to narrow it down and to actually put numbers behind it and do some financial projections, so that when they're considering that pivot, they're also considering the consequences to their staffing, to their rent. As Amore said, she's shrinking her physical footprint. They're considering real revenue numbers instead of kind of pie in the sky. If I do this, then maybe this will happen. And that's a lot of the support that we've been given through the pivot. The program itself is a 3-part online workshop series where the instructor does lead the business owner through development of ideas, as well as creating an actual pitch deck, so that then they're able to have something in hand, something to show potential investors, but something that they can actually look at once everything is said and done. And then that pitch deck actually is used for Columbia's purposes as part of their loan package if they're applying for the Columbia loan.
Luz, let me ask you, we've talked about this gap in the funding that's needed in this whole small business space, and particularly in the minority side. And we've, heard Kaaryn reference a couple of public-private partnerships in New York, including her program itself is essentially a public-private partnership. What are you seeing? And are there examples of public-private partnerships that you see working? Do you think this is something that is going to have an impact on how this all works out?
Yeah. So, well, first of all, Amore, congratulations. It's inspiring to hear your story and see the determination and the passion that you have for what you're doing, to see you doing well. So congratulations. It's wonderful. So, I'm very encouraged, frankly, by how some public and private sectors have come together in a number of states. New York is one of them. California is another one. setting up funds to provide responsible and affordable credit, business advising, technical assistance to small businesses that need it the most. We've talked about it, but as we know, the federal government's CARES Act and specifically the Paycheck Protection Program, while needed and helpful to some, it left most of the smallest, most vulnerable businesses behind. And frankly, even though the ones that got it is just not enough money, right? It's not going to help with the rebuilding and reopening and what small businesses need to do. In California, Accion Opportunity Fund is working with the CASE task force, the California Enterprise Task Force, to launch the California Rebuilding Fund. And this fund, in essence, brought together philanthropists, public sector in the form of guarantees, banks, corporations, lawyers, attorneys. And it's really, the purpose is to aggregate funds from both private and philanthropic and public sector sources, and to address that capital and advisory needs that we know California small businesses are going to have as they reopen and recover from the COVID-19 health and economic crisis. And we were very intentional that this effort needed to target the smallest of small businesses, right? So in California, nearly 4 million businesses with fewer than 50 employees, they're going to have access to loans, up to $100,000. We think in some cases the loans are going to be much smaller than that. And really, the fund is also helpful because it's equipping community-based lenders, such as us and 12 other lenders, with the liquidity, the risk mitigation, and the support that we need in order to help meet the unique capital needs of the small businesses in our communities. So we are very encouraged. I understand, Kaaryn and Amore, that the fund in New York is also launching the New York Forward Loan Fund, and that is being very successful as well. So we're going to need more of these because, as I mentioned earlier, not one single institution, not one single segment can solve, the gravity of the problem and the magnitude of the problem that we have to solve for small businesses.
Kaaryn, I don't know whether you can enlighten us a little bit about what New York Forward is about. Is that something you can speak briefly to?
So the Columbia-Harlem SBDC, as I mentioned, is all of the SBDCs receive funding from the Small Business Administration, but it is funneled through the state of New York. So, so we are also considered to be resource partners for the state of New York. So New York State has a loan fund called the New York Forward Fund, and our center is one of the resource partners for that. The idea behind the New York Forward loan originally was to get money to businesses that were not able to take advantage of PPP and EIDL. In total, there are about, I believe it's something like 6 million businesses in the state of New York. Around 3 million were able to get some PPP or EIDL funding when the New York State Forward loan was initially created. And we knew that there was going to be a shortfall. I think the expectation was that the shortfall was going to be something like $30 billion for those other businesses. So New York Forward was started specifically to help those businesses. It also was designed to help small landlords who were suffering because they were not able to collect rents, small businesses, nonprofits, and in some cases even I think it's their construction businesses, or there was one additional category in there. It was rolled out kind of sector by sector during pause. So as each group, each phase reopened, there was a certain set aside for that phase. There was also a preference for businesses that were owned by women and people of color. As the New York Forward loan has continued, they've lifted the requirement that a business cannot receive PPP and EIDL funding. So businesses can get all three. But it has very, very similar requirements, very similar terms, low interest. I don't believe there's a grant attached to that, but it is a long-term loan that is proving to be helpful for small businesses in New York.
Good.
Yeah.
So one of the things that has come up repeatedly when you read about small business, particularly storefront small businesses, is the sort of ricochet effect with closures and openings and partial openings and closures again. And it does look, I'm no epidemiologist, but I wouldn't be surprised if we saw additional waves. If you look at what's happening in France and Italy right now, it's worse than it was at the height of the initial phase, and they're shutting down again. What do you see in terms of small businesses? How can they have any visibility into what government is, planning to do? Is there a way for them to understand, what government plans are in, say, California, where there's a complicated structure, and I gather something similar is going on in New York? Are there resources that people can go to answer those questions?
Hopefully there will be after November 4th.
Right.
Yeah.
I mean, at the very least, whether there's a change or not, we will kind of know the direction in which we're going. Not necessarily. I mean, honestly, one of the things that we're now telling our clients is the loans that are available now they're offering such amazing rates. It's almost like free money. And so, you're better off kind of applying, getting the loan, and even if you decide you don't need it, then you give it back, than just sitting. And we've had situations, especially some of our clients who went after some of these loans very early. They were eligible for larger amounts. They didn't have the foresight to take out the full amount, and now they're still in the same position, and they're coming back to us asking if they can get it, and the answer is generally no.
Right.
And so, whether you are a business starting out, whether you're a business in crisis, we're talking about 1% and 3% loans. It makes sense to go
prepayable, right? So if you don't need it, you can pay it off. Right?
Yeah, they're not going to get better deals. I mean, and there's some businesses, specifically the restaurant industry. I mean, it's very, very difficult to get a loan to start a restaurant or to expand a restaurant because they are so speculative. And so, a lot of this it's important for small businesses to ask the right questions, to go to the right resources. And that includes their accountant, it includes their bookkeeper, and it includes, resources like Accion and like the Small Business Development Center, where we can, guide them to start thinking about this strategically instead of just, focusing on the immediate crisis.
Mm-hmm.
So let me ask a concrete example. If you're a small business in, say, Lower Manhattan or in San Jose, in the case of California, where do you go for advice? What's the best first visit for a small business that's contemplating trying to figure out how to pivot effectively and survive through this?
For New York, it's definitely, the Columbia-Harlem SBDC. We are the regional partner. We are the regional center for Northern Manhattan, but we work with any business owner in the state of New York.
Okay.
There is there are 3 centers in Manhattan. There are 2 in Queens. I mean, they're all over the place. We have quite a few centers, and as I mentioned before, we're part of the SBA. We're a resource partner to the SBA, but there are so many different technical assistance and counseling resources in New York. We really have a wealth of opportunity and support here. Yeah,
I'm assuming that the challenge is picking and figuring out where to go for that first thing. So that's a good suggestion for anybody on the line who's got their own small business issues. First go there. What about in California? What would you suggest?
Like Kaaryn is saying, SBDCs, there are a number of them, and also community development financial institutions, CDFIs. And so there is opportunityfinancenetwork.org is the trade association for CDFIs. So if you go in and you put your zip code, it will show you all the CDFIs that are available in the area. And CDFIs, provide low-cost capital, technical assistance, financial advice, business advising, how to save money. I mean, there's a lot of services and a lot of resources that are available to small businesses through CDFIs and the organizations that Kaaryn was talking about as well in California.
So, we may, as Kaaryn referred to, have a change in approach to many things in the next month on the governmental side. And I thought I'd ask Amore if there was one thing that government writ large, whether it be federal, state, or local, could do that would substantially help you or people in similar situations to you. What do you think it would be?
Well, of course, my number one thing is to make funding available to more small businesses like myself. I will say that, prior to the whole epidemic and the EIDL and the PPP, I never had one or wasn't able to get one.
Right.
And so, it was available now. So it was like, why couldn't something like this be available to us prior to the epidemic without there being, pandemic? So I think they should make, more funding options available to small businesses like mine, and also, make it available earlier on when they're starting so that they have the funds to continue and to grow their businesses, as opposed to going, several years and then having to close their business because they don't have enough funding, or just running into a lot of the problems that we face as small businesses when we don't have access to capital, and when most of us are underfunded and not and turn down a lot for loans. I would say that I didn't necessarily try many different institutions, but I've tried a couple times with the bank that I've been banking with for the last 10 years. And so I was not able to get a line of credit or anything like that. But like I said, with the pandemic and then these loan options being available to us, or this type of capital source, this is something that should be available, to most of us, if not all. We should have those options. And I think the government should really listen to small businesses and really take into consideration our voices and some of the issues that we face in terms of getting access to capital.
Yeah, as I pointed out, it's basically half the economy. And, the idea that we're going to have a recovery without the small business sector being the lead is kind of misleading. Do you think the issue, Luz, I know that you and I have talked about this from time to time. Do you think the issue is really not so much about debt as about getting that seed, what we call equity capital, which is, among other things, necessary to get a bank loan? You need to have some skin in the game. Are we focusing on the wrong thing? Should we be focusing on grants to help people get started, and then I'll ask Kaaryn the same question.
Yeah,
I think grants would be a good way to go. Yeah. 100%. I think with a lot of the small business, when you get the loan or the line of credit, a lot of the things that we're thinking of, because I did think about that. I'm like, oh my God, I'm going to have this money now I have to pay back and all that, but with grants, I think grants would be a really good way to go. And for most of us, in addition to not having the access, I think it's sometimes we just some don't know how to go about it or where to access the information or have the guidance. And so, like I said, if it wasn't for programs like this, I don't think I would have had the guidance. I might not have tried, or I might have tried and not done it the correct way. But with the, CCBP and the Columbia-Harlem, center, I was just able to take advantage of some of those opportunities. Like I said, it's just, for most of us, it's not having the guidance or the resources, or sometimes, just knowing the right way to go about it.
Right. It might be a relatively small amount that would make a huge difference too.
Yeah.
Liz, what do you think about that question?
Listening to Amore, it's kind of like, you don't want to go to the doctor when you're sick, right? You want to make sure that you're getting your annual checkups and you're getting, your pressure taken, et cetera, because when you're sick, then the intervention might be significantly more severe. And so, one of the things that we advise our business owners is establish relationships when you're not necessarily in desperate need. So whether it's with a CDFI or the minority depository institution in your community, or frankly, Amore, in your case, you have a bank, right? That you're saying you've worked with for 10 years, and yet when you needed them, they never offered you a line of credit. It's important to get, these financial partners to know your business and to take an interest in your business when you don't need them, right? Mm-hmm. So that when the crisis happens, then they understand you. And what they need to do is they need to look for, okay, how can we help you? I think that, I mentioned this earlier, not all businesses are created equal, and not all businesses are suffering the same challenges at the same level. And so what that means is that the support that one business might need is different than another. I think that in many of the cases, particularly now, grants is the only answer, because a lot of these businesses with zero revenue, they don't really qualify for a loan. And so you got to give them this permanent capital that they can utilize sort of to get through the crisis, get back on their feet, whether they're going to pivot, whether they're going to do the things that Amore has done in her business, then to be able to say, okay, now I have a plan, and now here's what I think the future is going to look like. So now I may qualify for a loan. And I think it's important that, when small businesses are looking for loans, that they really focus on responsible lenders. And I cannot reemphasize this enough. We have seen businesses destroyed because they took on debt that was, not transparent. The terms were not disclosed. The annual percentage rates were not provided. There were all sorts of hidden fees and penalties. And so it's really, really important for small business borrowers, particularly now when we think the predatory, merchant cash advance and all the lenders that are not responsible are going to come out because they know small businesses are desperate for money. Make sure that there is something called the Small Business Borrower Bill of Rights. You can read that. It's online to learn about what transparent pricing and terms and what you should look for when you're looking for a loan to make sure that you don't get in a situation or a product that you can't afford. It's really hard to believe, but if you go today to get a mortgage or a car loan, the lender has to disclose for you what is the rate, what is the term, and what are the fees. Small businesses do not have those kinds of protections. By law, small business lenders are not required to disclose those terms. And so what happens is that a lot of small businesses who are desperate in some cases will get into a loan without knowing what it ultimately means for them and for their business.
Yeah. And even some of the better known names in lending outside of the banks that have been available, been willing to extend credit, are doing it at rates that are plenty shocking. So, Kaaryn, do you agree with the idea that some type of seed capital be key? But also, I wonder what you think of the idea of such a program that doesn't bring with it financial advice, which is so critical to using that capital.
So I think we're looking at two different groupings. When it comes to someone who's starting a business who doesn't have the track record, we cannot responsibly entrust them with money that was donated by whoever, because it is so important for business owners to understand finance, and it's almost scary. I always say to people, if you want to make money, you have to know how to count. And that, for some reason, is just one of the biggest challenges that people have, is they're scared to count their money. But that's where the power comes in. That's where being able to make good business decisions comes from understanding what your numbers are and what you have to work with, and being able to develop some goals based on industry norms and industry practices. So to me, that's where the fun is, you know. But yeah, we've seen different, you know, small programs, which are education coupled with a grant, education coupled with a contest. And we've had quite a few businesses that actually are, you know, are getting their seed capital, because they're doing the work. They're developing a pitch. They're developing a business plan, a business model, and starting in that way. And it's actually kind of a great exercise, because not only are you getting business education, but you know, the more that you're pitching it, the more that you put this on paper, the more feedback you get before actually spending money. So at Columbia Business School, we do teach the lean startup method, rather than the traditional write a business plan. And that for us has always been kind of, you've got to be able to go out and at least get feedback. If you can't get feedback, how are you going to sell the product?
Right.
And so just very, very important to do that. And part of this also, I mean, one of the best things about kind of starting or growing a business in 2020 is crowdfunding. You know, the idea of kind of, you create something amazing and you get the idea out there, and people will be interested in investing in you, and it can be a great way to get some seed capital.
So to paraphrase what I think you're saying is that, you know, yes, would be great to have seed capital, but seed capital really needs to go with the type of training and planning that's necessary to use that capital responsibly and effectively, because it doesn't help anybody to provide them with capital that they can't use to create a sustainable business. So that's an interesting, take on the policy side. So we're now at the point where if there are any audience questions, we'll take them. I don't know where we stand on that. Let me take a look at my thing here. So it looks like we're not getting any questions at the moment. So let me ask the panel a larger question about what do you think the next thing that needs to happen from a federal policy standpoint would be in terms of creating some kind of a long-term sustainable solution for very small businesses and their access to financing, right? We've talked about how that financing need just doesn't get met, and how important it would be to provide that. Are there practical long-term policy or solutions that you think would work? And are they governmental or are they private in nature? Let me hit that big question to Luz first to see whether she has any views. I think you're on mute. You're not unmuted.
Sorry. Yeah. I think we have a couple of opinions there. I think first and foremost, Congress needs to approve the proposed $2 billion in emergency funds to support the Treasury Department's community development financial institutions, because as I mentioned, these organizations across the country have shown great success as PPP lenders, and in many cases outperforming much larger and better capitalized banks. If you think in just a few months, around 300 CDFIs made $7.3 billion in PPP loans. Right. As an example, JP Morgan Chase, which is the largest PPP lender and 9 times the size of the entire CDFI industry, made 4 times the amount of PPP loans as these CDFIs. And again, these organizations are locally community-based, and they have the reach into underserved communities, and they are the perfect channel to deploy those funds. I think that, there is a lot of risk in the market right now, and a lot of lenders are going to retract before, they put out more money. And so having the government, the federal government, reauthorize what's known as the State Small Business Credit Initiative, with at least $10 billion in appropriations. If you think about what happened after the Great Recession, the SSBCI was created then to deliver flexible, affordable capital to small businesses around the country via loan guarantees and loan loss reserves. And so in California, as an example, this program has been incredibly valuable for lenders such as ourselves and many others to deploy capital to underserved communities that otherwise would not have received the loans. And so as we face another period of real challenging economic, recovery, I think the SSBCI can again create that strong incentive for financing of small businesses. Last week, we partnered with a group of small business experts over the last many, many months. And we released a report called Big Ideas for Small Business. It was in collaboration with Drexel University and Yale. And it's a 5-point plan that could really help build the small business sector back better, stronger, and more equitable. And things that were discussed there were, a forceful response to the COVID crisis by providing grant and loan programs that are appropriately scoped. So to Kaaryn's point, if you're a startup business, how do we match a grant with financial coaching, technical assistance, business advising, so you can maximize the use of those funds. Also, unleashing America's entrepreneurial spirit by reducing the barriers to entry. So, giving disadvantaged entrepreneurs the tools that they need to succeed and strengthening antitrust and enforcement laws.
Right.
Also, making sure that, we have a financial system that works for Main Street, because our system today does not. And, launching a new generation of federally backed debt and equity products, and strengthening, again, community banks, CDFIs, nonprofit financial institutions that really are the ones that have an interest in helping rebuild Main Street. And then, looking at public and private procurement to help build wealth in minority communities and making sure that those small businesses get access to bidding on the contracts that are being made available, whether it's through large companies or by the government. And last but not least, we need to collect information that's better and more robust about the small business sector so that we can continue to evaluate and more rigorously continue to improve the programs. As I've always said, sunlight is the best of disinfectants. If we don't know what programs are working and how small businesses are or are not being served, we're never going to be able to solve this big problem and help this wonderful community, get back on their feet.
Yeah, it's surprising that the statistics that come out of the government and the SBA lump companies from 1 employee to 500 employees and call them small business.
Right.
500 employees is somebody in an industrial park with that's just not very relevant to Amore or somebody working with 5 to 12 people. Kaaryn, do you have a particular approach that you think that would be most successful?
I agree with Luz. I mean, some additional ideas really are, financing the CDFIs, not just in terms of the capital that they can learn, but their technological capacity, so that they are able to connect with their clients much more easily. We've hit a point now where new business owners are younger in many cases. They're 40 or younger, and they're used to banking on their phones. Right. Quite frankly, they're not necessarily going into branches the same way that their parents or grandparents do.
Right.
And so, what does that look like when CDFIs are competing against a Chase or a Bank of America, where you can do everything on the phone? Mm-hmm. So I think that's a big challenge. Another issue is the bankruptcy law. Right now, for any of these businesses, which may have been in amazing shape before this pandemic, but have really, some of them will be decimated by the pandemic, especially as I mentioned in Midtown. If they have to declare bankruptcy, they will not be able to get another loan for 7 years. And so, and these are people that are they're strong business owners who, for no fault of their own, ended up really getting hit by this. So that has to change as well. And then really just more of an effort to connect with minority-owned businesses, women-owned firms, in order to ensure that they have what they need. You know, we offer a lot of training programs, but there's got to be money put
Right.
forth behind it. I mean, we've seen even in the equity market, the way that women and men of color are treated when they are trying to get capital, and that really has to change.
Yes.
On the debt and the equity side.
There's no question about that. You see, I mean, the thing about crises is they expose the things that are happening all the time, but somehow don't get paid attention to. And I think one thing we're seeing here in the small business experience and what you're talking about in venture capital or any other area, and in the Black Lives Matter thing is, all of these are related, and the lack of financial resources in the minority community and with many women, has consequences in terms of their ability to build capital and be successful long term. So hopefully these things won't go right back under the covers when the virus goes away. There's an opportunity here to make some fundamental change in how we think about small business formation and support, and I'm hopeful that we'll be able to go there. So